what's going on, everybody? Hey, welcome back to another training video lesson, and we got another good one for you today, okay? So what we're going to do is we have been working on a series. It's my Options Elite live coaching class, but we are doing a beginning series. This is part 3, okay? This is part 3. So hopefully by now you've watched part 1 and part 2. We've got over 700 emails in just a couple weeks regarding those lessons, okay? So today's part 3. Hey, if that sounds good to you and you want to watch it, hey, do me a favor. Subscribe to the channel if you haven't done so yet. 2, hit that little bell to be notified whenever I shoot a brand new video. And 3, hey, give me a thumbs up, make a nice comment. I really appreciate it. Doesn't cost you anything, and it helps support the channel. All right, you guys are ready? Let's roll that beautiful intro. All right, everybody. Hey, welcome back, like I said, to another video lesson. This is part 3 of our series. So if you have not watched part 1 and 2, I highly encourage you to do so, because we talk about all sorts of amazing concepts: supply and demand, market phases, the squeeze, all sorts of stuff. So we're going to build on what we talked about last time. This is a very powerful class. So I highly encourage you to get a piece of paper and some notes, because this is real world stuff. All right. And throughout this video lesson, number 1 is I do a live coaching class. For people who have my Options Elite University, they're offered an opportunity to get live coaching that goes with it. And I do these classes Monday, Tuesday, Wednesday, Thursday, and then every other Friday I'll do a class usually related to cryptocurrency as well as Forex. So this is my live coaching class, okay? But this is part 3. I want you guys to see what we do. So if you're interested in that, check down below in the description. You're going to see my Options Elite Master Course. Okay, so you can't get the live coaching without the Master Course, and check it out, because in this month, I'm giving away my Forecast Pro indicator for free to anybody who gets my Options Elite course, okay? I sell this indicator all by itself, but this month, I'm giving it for free, completely for free, to anybody who gets my Options Elite Master Course. Check down below in the description for details, and any of the other indicators, check down below for that, because I've got some amazing bonuses if you get some of these other indicators through my affiliate link. All right, so sit back and enjoy this training video lesson. Now, in the option world, I am gravitated more towards selling strategies, right? Primarily credit spreads. I really like credit spreads. They fit my lifestyle well. They're very easy to manage, and I got a good set of rules that work. Okay, I got a good set of rules that work. And that's just the way it is. So the way I like to do and again, we'll shift into what I really want to talk about extensively. I want to get into phase 2, because I believe phase 2, if you're going to use that institutional methodology approach, I believe phase 2 is such a big point. Hey, Pat, what's up, my man? Just talking about you. So here's the way I do it. The way I do it is this blue line represents my short-term momentum. Okay. My short-term strategies are bull flags, which Charles loves bull flags. A lot of y'all do. They're great. And squeeze trades. Okay. But I'm also looking at squeeze trades a lot differently than I used to. And that was just kind of by accident. So that's my bullish short-term trades. And you can just pick one setup and you can rock and roll with that setup. Dave Johnson only trades bull flags and bear flags, and he's very successful, right? John Carter, well, he claims he trades squeeze pretty successful. I really don't know about that crap, but it's immaterial. Bear flags. When it's going down, I like to trade bear flags. And I like to trade bear squeezes. So I have a mentor that made over $50 million trading credit spreads. Over $50 million. And all he did was sell bull put spreads and bear call spreads. Like literally that's it. And the way he would do it is it was a bull flag. At night, he would look for bull flag setups and bear flag setups. And then he would put a watch list, a bullish watch list and a bearish watch list. And then at 2 o'clock to 3 o'clock p.m. at the end of the day, he would go to his watch list that he identified the night before, and he would put on a bunch of credit spreads. And he wanted to trade a flag as it was pulling back in anticipation that it was going to bounce. That's it. That's all he traded. And he just absolutely obliterated. He crushed it. So what I've done was, you know, I like that same bull flag. The only difference with me is I want to see that it's in a squeeze. I believe the Squeeze Pro to be so amazing. I look at it, I think, differently than a lot of people. Well, I'm not going to say differently, but I have, you know, a certain type of approach that I use. And it works too, by the way. It freaking works. Just so you know, like, what I'm telling you is like, you will grow your portfolio like consistently. Doesn't mean you're not going to lose, but you'll grow it. So I like to see it pulling back. Okay, kind of like this. Look at this picture right here. I like to see it pulling back in a squeeze. And I prefer early into the squeeze, right? Like in this area. Because remember, that's phase one. We all know 3 market phases. It's phase one, the contraction phase. That's the market's setup. Volatility is contracting. Market makers are doing two-way business. Institutions are planning for their next line. Do they want to take it up or do they want to take it down? And we don't know. We have no idea what's going to happen because it's the setup. So everybody who trades the squeeze, like call options and put options, you're 50-50 if you're lucky. And the reason why I say you're 50-50 because lots of times you're in a trade, you want to go bullish, it goes down, you get stopped out, and then it goes right back up, which is we're going to talk about that part today extensively because I want to give you guys stuff to think about so we can all, well, not all, but those of you that want to trade with this methodology, we can start looking and seeing the same stuff. Okay? But what I'm doing with my spreads is I'm trading these flags as they're entering into a squeeze. It's called green to black, right? Green to black. Green to black. After a pullback in an uptrend, sell a vertical spread. That's the mantra, right? Green to black after a pullback in an uptrend, sell a vertical spread. But here's the thing. We're leaving stage 3 into stage 1. So we're catching it. Okay? And that's it. That's what I do. So since the blue line is at the 50 and angled down, I'm looking for bullish trades to the upside. That's it. Okay? Now, because every time it does this, well, not every time, but most of the time that it does this, okay, it bounces a little bit, right? You can go back and you can look at it yourself. You know, when it kind of crosses and does this, you know, it usually bounces. So we're trying to catch that because this line, when it enters down here, usually pretty shortly after it bounces. And that's this market doing this flag. So today I'm going to trade bull put spreads. That's what I like on the daily time frame. And I'm going to be right here. I'm going to go to my scans and I'm going to go green to black daily. This is bullish daily. Now, I'm not trading any 30-minute trades because the only way I do that is when this orange line is in the lower zone, I look for bullish trades. And when it's in the upper zone, I look for bearish trades. That's it. So today, my focus 100% on options is bullish trades. So if you guys trade squeezes, to the upside, this is when I would be. Now, you could wait till it actually just gets down here in the bottom and say, look, I like it better when it does that. Me, since I'm doing a spread trade, I can withstand a little bit more pullback. Okay? So I'm just pulling up my scans, and then we're going to jump into phase 2, which I'm going to give you guys some serious stuff to think about because, hey, we need your help. So here's a bullish green to black. Here's a bull flag daily. And then I have this scan right here, which is, this one's Alex in the money. It's green to black, another one. And then I think a 5-dot squeeze. Okay, 5-dot squeeze. So I'm just setting up, getting ready. So right here. Okay, now I'm going to do this really quick because I need to bullish green to black. This one is my top 10 holdings. So I'll tell you really quickly what I got. And this stuff works, man. I mean, it's just like, it's about as easy as it gets. So here's my scans. There's a lot of stuff. So, sheesh. So I've got my master watch list, which is the top 10 holdings in the sectors. I'm going to sort by this code that Alex created, which says that if it's green, those haven't loaded yet. If it's green, that means it's stacked moving averages, right? So this code tells me which ones are in uptrends. So look, there we go. Wait, wow. Okay, before we jump into anything, this is it. Look at this. Here we go. SPGI, green to black. It's pulling back. I'm going to go ahead and look at that one really quick. So let's go to SPGI. Now it's abysmal. Look at it, 37 days. Okay, the volume's abysmal. These spreads are just, oh God, look how horrible these are. I'm not even going to waste my time with that. The spreads suck. But this is the setup that I'm looking for, right? So anyway, I got that pulled up. Damn, there's a lot to go through. My bull flags, my green, green, green. Okay, cool. So all day today, I'm going to be looking for trades. I like to take 3, maybe 4 trades. After that, I'm done. All right. Let's get into some really good stuff. Good stuff. Here we go. Hopefully y'all are ready. I'll get some notes because this is going to be interesting. All right, everybody. All right, so today we're going to continue to talk about the 3 market phases. I believe this is a huge key, okay? Now, the people that I'm learning this concept from, you have to understand, I traded bull flags and bear flags, with my mentor, Dave Johnson. I never looked at it like this. Also, I like to trade the squeeze. And I told this story yesterday, but I'm going to tell it again because this is going to set it all up. This is good. This is a very important class today, I believe. So one of my friends said, hey, I saw your, well, he wasn't my friend at the time, but he told me, hey, I watched your YouTube video. I really like the way you explain the squeeze. Cool. He said, but you're doing it wrong. And I was like, all right, dude, who are you, right? You're trading it the wrong way. And I'm like, all right, cool, whatever. Let me send you a video. Watch this video. I was like, all right, I'll watch it. He sent it to me and I did not watch it. I'm like, man, who's this guy, right? Who the heck is this guy? He drives a truck, right? I'm not saying anything bad against a truck driver, but this guy drives a truck. I'm like, who's this guy driving a truck? You're going to tell me I'm trading a squeeze the wrong way. And then about 2 months later, he reached out again and he said, hey, man, I just want to let you know I bought your market internals course and I thought it was really good. And I appreciate it. And I'm like, oh, hey, no problem. It's great. I'm glad you supported it. Then he said, hey, did you watch that video I sent you? And I'm like, man, I'll be honest with you. No, I haven't watched it. But I'm going to watch it now. I promise. And I felt obligated since he bought that Marketers Internals course for me that I had to now watch that video. When I watched that video, it got me looking at things completely different. I'm not going to lie. He was right. I believe I had been trading the squeeze the wrong way. You have to understand, Patrick said it good yesterday. I have kind of a two-pronged type of approach. I'm trying to catch the stock as it's entering into the squeeze, leaving phase 3, going into phase 2, what I just talked about. That's where I'm going to sell the crap out of credit spreads to take advantage of the market setting up for whatever its move is. Now, phase 2, we're going to start talking about phase 2 in depth, because this is where I believe the secret lies. I do. Okay. Now, this is the play. The expansion phase is the play. Increasing institutional volume. Range starts opening up, taking out highs and lows. Smart money accumulates positions at discounted prices. So it leaves the contraction phase, the squeeze, enters into the expansion. So immediately when we get a squeeze, you should now see every squeeze as, okay, wait a minute. That's the contraction phase. It's the setup. It's undecided. But the moment it leaves, that we have now entered into the expansion phase. So you know. And this is where 90% of the people get chopped up. I'm telling you. And the reason why I say that is the people that I'm learning this concept from, because I'm always trying to learn, they were institutional traders. They managed trillions of dollars. And what they wanted to do now is teach the retail traders, aka us, to start trading like an institution and understanding what's actually really going on with the market and trade like that. It's going to take practice. It's going to take a lot of work. But I believe that if we can really nail this down, then we got it. We got it. And while I'm going through this stuff, I'm going to continue to trade credit spreads, and I'm going to continue to win. I'm going to continue to trade crypto, and I'm going to continue to win. I'm going to trade Forex like this. So I'm kind of shifting from just a price action approach into this. So I'm kind of in that not experimenting, but I'll use that word, phase. Okay? But here we go. Your effectiveness as a trader depends on your ability to recognize these 3 phases. So we're going to talk about that expansion phase. So let me pull up some more little charts. I made let me find it really quickly. I'm looking on the other screen. Okay, let's go to keep everybody up to date with what's going on. Expansion phase 1. Okay. What are they? So whenever you get a contraction phase, what you want, and again, we can see that with the squeeze. All you're going to do is draw a box. And you're going to draw a box when it clearly leaves, or the squeeze fires, right? And what we're going to do is we're going to draw that line right in the middle. Okay, that line is the most important line. Everything revolves around this expansion line, this value point, everything. Okay, it's the tipping point of belief that we've talked about. So these lines mark a significant estimation of fair market value across multiple time frames, above and below the current time frame being observed. So basically, whenever price leaves your contraction phase, you need to draw a line right in the middle of your box. That is your expansion line. If we're above the line, then, you know, people, they're bullish, right? If they're below, they're bearish. So now, that's all we got so far. Because what happens is, you know, these expansion legs, there can be multiple legs. But before we get into that, we're going to just keep talking really quick about this. Okay, and again, I'm going to explain it good, don't worry. I got this. I've been studying the absolute crap out of this. So how can it be used? Expansion lines serve as the final marker of fair market value, painting forward until new values are established. So, again, whenever it leaves that expansion line, it's the tipping point of belief. Again, simply put, they show when a market becomes under or overvalued in relationship to the current line. Remember, we talked about institutions, right? Pretending like you have a store, you have inventory. In order for you to make money, you're going to have to accumulate inventory at a discount, right? And then you're going to sell it back to somebody for more money, right? So go back to this. In this expansion phase, this is where smart money is accumulating at discounted prices. They're accumulating, okay? They're accumulating before the trending phase. Now, understand, we talked about this yesterday extensively, that they're not buying small amounts of money. They're buying large amounts of money. And they can't just go in there and just buy it all at once. They accumulate. They accumulate. Also, when they're buying, they need a lot of liquidity. They're entering big positions. So when they're entering huge positions, there's got to be people, let's say they're buying, there's got to be people selling, right? We talked about pain and pleasure yesterday. When people are experiencing pain, they sell, right? That creates liquidity. Institutions suck up that liquidity as a way to start accumulating. This is the phase where retail traders get killed. And this is where I believe if we really, really focus on this phase and get good at this phase, position ourselves just like the institutions, I think we are going to go to levels that are unimaginable. Maybe I'm wrong, but I'm certainly willing to give it a shot. Okay. Now, you can use expansion lines to estimate if you're getting strong trades. Okay. So let's go into, I'm looking at my other screen really quickly. Let's pull up this one. Okay. Contraction, expansion, trending. So remember, this is where people get chewed up. Now, one of the things that I would encourage y'all to do is establish a bias on a larger time frame. So, for example, you can use the daily as a larger time frame. You can use the 1 hour as a smaller time frame. You can use the 15-minute. You can use the 5-minute, the 3-minute. But you need an anchor chart. And that anchor chart just gives you the bias. Okay? Now, one of the things that, let me see if this one here. I'm trying to think how I can explain this the best way. Okay, let's go right here. Remember, the balancing point of a market maker's book. So think about what's going on. We're in a squeeze, right? In an uptrend, retail traders are getting into this trade in anticipation that it's going to break to the upside. I'm not going to trade in the squeeze anymore. Okay? What I am more interested in is what happens after the squeeze. And it happened yesterday. We'll go back and we'll look at it. But look, price breaks out. Retail traders they're happy, right? They got in, or they're trading the breakout. Bam. Crashes down. We notice the expansion leg. Now what we're watching is that line. Because here's the thing. You can have what's called a direct breakout expansion. So it can break out of this contraction phase and just keep going up, right? It can keep going up. It can keep going down. It's basically a direct breakout. Now, you also can have a multi-leg expansion. A multi-leg, this is where I'm really interested in, is when it breaks one direction, pulls back down, and then kind of pulls back up, right? So like in this case, this is a multi-leg expansion because it broke out, right? And here's, think about the psychology. People getting into the trade, they're getting stopped out. They're switching now because they're like, okay, wait a minute. I got in this breakout. Oh, no. Oh, no. It's rolling over. Oh, man. It's hitting my stop loss. It's going down. What do they start thinking? I'm going to miss the trade. I'm going to switch and go to the downside. This is exactly what happens, man. They go, I got to switch. I got to switch. I don't want it to. Yes, baby. And then, bam, finds a floor, shoots back up, and now they're like, oh my gosh, oh my gosh. They're going back to the upside. They get stopped out. They jump in again out of fear that they're going to miss out. So they jump back in long, only to watch it go right back down. And in this example, I mean, that's what happens. So if you recognize the contraction phase and you're patient to just watch what happens afterwards, right? So it comes up into this. So here's the deal. We are expecting, let's assume that our bias is up. Okay, and we talk about this a lot. I don't want to go into too much detail because I'm going to end up building lessons in the membership area. But I'm open to discussion. So let's say our bias is up. If our bias is up, for example, on the larger time frame, you guys know we are going to start accumulating a position under value at discounted prices, just like the institutions, ahead of what we believe will resort back to the upside. We're trying to accumulate in the expansion phase ahead of the trending phase. That's what we're trying to do. So, in this particular case, it comes back up here, rejects, 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 bam. So, if your bias was down, you are waiting to see what happens here. If this holds, game over. It's called the price settling pattern, where it breaks out into a multi-leg expansion and settles on value. Okay? Settles on value. Now, go back to this. This is what happened the other day. This is what I'm really looking for. Because remember, this line extends out. Okay? We need to pay attention. What is happening at this line? And man, Carter, I know you jumped in or whatever, but for those of you that are just brand new, don't worry. This is my primary focus along with supply and demand. And for the next year, because again, I've always been thinking like a retail person. I don't want to do that, right? I want to build positions at discounted prices and just sell them back and make a lot of money. And this is it, and I know because they were institutional traders. And you can go and look at your charts. And you're going to start to see this. Now, what I'm looking for is a multi-leg expansion. This is what I'm looking for now. When it breaks a direction, comes back up through, breaks back down, and then what I would like to see is a hook back up. And then this area is very powerful, right? Because we want to see it settle. But it break back up, and I'm going to show you this happened yesterday. And what I'm looking for in that Forecast Pro is a divergence or the ready aim fire. I want to see a divergence on that kind of like that second hump, right? Or it can be like this. 1, 2, 3. So you got an A, B, C. So it breaks up, comes down, breaks back up, and then tanks. That you can call it ABC, every different. It can be A, B, C, D, right? This could be A, this could be B, this could be C, D. And then I'm looking for a divergence on that leg. Because remember, what we're trying to do is anticipate what's going to happen. Now, this is just one way, okay? Again, we're talking about, I'm just showing you different things. Because if I'm in this trade and my bias is up, I'm going to enter down here. But what's going to happen is when it breaks that to the upside, I'm expecting to continue. I'm going to move my stop loss up here. That way, if it breaks back down, I'm out with the small gain. See, and Charles will tell you this. And Charles will tell you this. I know he will. It's anybody can enter into a trade. Anybody. But what's going to separate you is your ability to manage that trade. Right? When to recognize you're going to be wrong and to get out. When to recognize when you're going to be right and maximize it. If I enter in this expansion phase, okay, I don't know which direction. It's 50-50 which the trend's going to go, but I'm watching these damn legs. I can promise you these have got my utter attention. And I'm going to show you yesterday. But if we can recognize it, and then we can get in, and we can manage and recognize when we're wrong, that's going to separate you. Charles will tell you, man. He takes shots, he takes shots, he takes shots. But you know what separates Charles from everybody else in the futures world? Is he understands when he's wrong, and he's out quick. And when he's right, he maximizes it. So that's what we're trying to do. So here's the thing. Me understanding what's going on and understanding the phases. If I get in here because I'm accumulating, because my bias is up, for example, and it breaks the line and it rolls back over, I'm out. Small win. Reset. Or if my bias is down, this is what really is important. Let's say your bias is down. When your bias is down, you're only trading to the downside. So if you go up, down, up, you get a divergence, you can attack it. You can attack it. Attack it. Because you know you're in the expansion phase ahead of the trending phase, and you understand what's going on. People go short. It goes back up. They're getting stopped out. They're switching bullish. Boom, it drops. They get stopped out. They switch bearish because they think they missed the trade. It goes back up. They get stopped out. They're switching bullish. And then they all get killed. That is the psychology behind everything that's happening. And I believe that if we can really become good at this, and I'm going to become good at it because I paid money to become good at it. And I get up at 5 o'clock every single day studying it, studying it, studying it. And then we get in and we sell back to these fools. Phase 2 is so freaking important. So important. So let's go look at yesterday. I think it was the 5 minute. And I'm not in this trade right now, but I want to back out for a minute. And I want to look at yesterday. Okay? And what I am going to do is I'm going to put the ready and fire also. Okay? Just bear with me. I think there's R divergence, right? Where's it at? R divergence. Sorry. Oh, well, I don't know. It's here somewhere, but I can tell. Just put this on for a minute. Okay. Just for a minute. And I got the Forecast Pro also. Okay, let's back it out. Let's look at this time period right here. Okay. Okay, cool. So in this time period right here, look at this squeeze. So we know, hey, this isn't a contraction phase. We see it. I'm not entering in the squeeze anymore. No, that's what everybody else does, and that's why they're losing. Like, I'll enter into squeeze on a credit spread only. Like, nobody's talking about this. And when I get good at it, I'm going to start talking about it. But I'm still also going through the process as well, right? I mean, you guys know I trade bull flags and bear flags. This is something new. I traded the squeeze for a long time, and now I'm like, damn, I think I've been trading it the wrong way. I'm trading it the John Carter way, and that crap don't work. Don't work. It's 50-50. Squeeze. All right, look what happened. We're in a squeeze. We broke out. So we know we are entering the contraction phase. I mean, the expansion phase. We see it. So we draw our line in the middle. That's our tipping point of belief, right? Now, at the time, this is the way I'm doing my bias. Patrick, you asked about the bias the other day. So let me share with you. I'm using, and again, this is a different approach than we're using for the flags, okay? Completely separate approach. I want you to understand. But again, if you understand what's going on here, it'll make your flags even more effective. That's for another discussion. So on the bigger time frame, I have Heikin-Ashi candles. And I have Heikin-Ashi candles because I'm not trading on this bigger time frame. I'm using it for a bias. Man, these people need to stop calling me. It's spam. I'm using it for a bias. Okay? Now, what I want to know is, are we trending or are we range bound? This is very important because institutions, you know, they're focused more on the higher time frames, right? Like for the longer term trend. That's why it's very important to have a higher time frame. So we want to know one of two things. Is the higher time frame, what phase is the higher time frame in? Contraction, expansion, trending. Most of our money is made, I just want you to know this, is when we get into a trending phase, right? All these white candles just going straight up, or all those red candles. That's where we can kill it. Because what's going to happen is, in this approach, that's when we're going to be doing what we talked about yesterday. Walking up the ladder. And it's money. It's money. Now, we are in a squeeze, a 4-hour squeeze. So one of the things that I'm focusing on is whenever we're in a squeeze, and oh my gosh, I didn't even realize this. See my little box? My tipping, look, it went down, up, down, settled. Oh my gosh, I just noticed that. Look at that. Down, up, down, settled on value. It's called the settling pattern. That line is everything. And then it bounced. And it started several positive momentum candles. During that time period, on the 5-minute, remember, the market moves in waves. Doesn't move like this, like everybody, including myself. Higher highs and higher lows. Yeah. That's a textbook picture, but you and I both know that's not the reality. It moves like this. That's how it really moves. The bigger frame, the bigger move is up, though. We know because we're in the trending phase. So here's what we do. This is where I talked about yesterday, right? We recognize on the smaller time frame the contraction phase. And then, now remember, this occurred over here when we were down. If bias down, we trade down. So if you know that, if you know which direction you're trading, it makes a freaking big difference. So check this out. We came down. We happened to hit another value line almost to a T. We shot right back up. We're in the expansion phase. Now, it didn't print a divergence here, but you can see, and the reason why I didn't print it is that little stomp in the middle. But you can see really quickly here, and also we were talking about it yesterday, like the 1 minute and 3 minute did have the divergence. Okay, but it's still, boom. I mean, and you could have entered right there when it broke back through the value line, or add this divergence with a tight stop loss, right? And bam, it just freaking tanked. I mean, look what it did. It literally got everybody. Bam, bam, bam. So what I'm talking about is, what I really like is when it goes like this, 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 this. And if you can get a divergence on that second type of hump, ooh, or bam, 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 hold, bam. That's what we're trying to do. Now, if you notice on the 4 hour, it's about to get tricky because we're finally starting to consolidate. You can see it's starting to go sideways. Okay, you've got this forecast pro line flattening out. So now, if you had to put a gun to my head and say, what's going on? I would say we're range bound, which means it's an entirely different philosophy of thinking. Now I'm not trading what's called walk the ladder type of approach. I'm playing value line to value line to value line, right? So what's going to happen is, you see this squeeze setting up? This is a squeeze, and you can clearly see that it's going sideways. So here's what I'm going to be doing if it happens, is whenever we're range bound, and again, you trade what you see. I see range. Okay. Which means I'm not going to try to walk up and down the ladder. I'm going to trade value line to value line. So when this is done, this is what I'm hoping happens. Okay. I'm going to trade it back down to value. I'm not going to trade no stupid breakout. What I prefer is a breakdown, a break back up above value, look for some type of divergence or whatever up there, and then I'm going to trade it all the way back down. All I'm doing now is trading value to value, value to value, value, while we're sideways. When we're not sideways, I switch it. And this shit works, man. It works because I know these people. They are very successful. And this is what I'm learning. So, hey, you know what? Again, I never looked at it this way. Like Dave Johnson, you know, if he can trade bull flags successfully and make hundreds of, well, you know, just millions upon millions, yeah, hundreds of millions. Well, I know the damn bull flag works. I don't care what's going on right now in the 5 minute. Again, this is this approach. This is different than, you know, the flag methodology, the W patterns, completely different. Okay? Doesn't mean you can't trade both. Right? You can trade whatever you want. Listen to Charles. Charles has got it mastered. You know, he's in and out with his flags. Boom, follow it, follow it. But for me, what I want to see is when we get done in the contraction phase, I'm going to recognize the next leg is the expansion, and I'm going to try to hit these fools above value and take it down. What's going to separate it, though, is if it comes up and it comes to here, you have to understand, or wherever the value is, and it reverses, you got to get out. right? Your ability to recognize when you're right or wrong is huge. Another thing is if it goes up and crashes, right? Let's say it goes straight up, you get a divergence, you jump in on this first leg, and it breaks down. Now you can move your stop down here. And if it crashes back up, you're out. United States Canadian dollar is the perfect example. Perfect example. Look at this. This is the United States Canadian dollar, right? My bias was up. Okay, now it's shifting more neutral. But this is a perfect example. You got your box. It breaks up, breaks down, goes. Breaks up, breaks down, goes. Breaks up, breaks down, just like before. It goes, but it gets rejected. Look, look. It gets rejected. It's never got rejected before. Ever. You know, I entered this trade yesterday. I was talking to Rafa. I entered down here. It went up. I saw it getting rejected. I exited for like break even, basically. I made like a 5 pips. Not even worth it. But you know what's so exciting? Is this was different than what has happened in the past. Here, we were walking up the ladder. We're still walking up the ladder, but when we get rejected right here, there's something wrong with that. So now this could cause a waterfall to the downside. I'm starting to really recognize, and again, going back to the expansion phase. All I want you guys to do is start paying attention, right? Let's help each other out. Go back to this example. The range expands, came down, came back up. Let's say your bias was down on the weekly time frame, and this is with the daily or whatever. You get a divergence up here. You can go into that trade with more confidence than you can ever imagine. And if you get stopped out, so what? Because if you're right and you get in before the payout cycle, you are going to crush it. It's another example. Another example. Contraction. I love this. These are called multi-leg expansions. Multi-leg meaning it breaks one way, goes down, hooks back up. This is a multi-leg expansion. Okay, 1, 2. I love these because what it's showing you is the institutions are really battling each other, right? They're battling. There's no clear winner. They're fighting. You know this. You can see it. So check this out. It breaks, comes down, breaks, pulls back, it holds. Bam. That is price settling. That pattern is money in the mother effing bank. Break up, break down, break up, pull back. It's either going to shatter this and go down, or it's going to bounce. If you can hold out for this type of pattern, this spot is the money spot. If it goes down, it is probably going to tank. It may not. It may go down and then come back up and form another expansion leg. Now, the red represents the expansion phase. Again, you got to be good to trade the expansion phase. Think about bull flags. I'm going to also translate this into bull flags in a minute. Because what they're saying too is if you're kind of new to all that approach, just trade in the trending phase. I'm not new. Okay, I can understand. I might be new to this methodology, but I ain't new. But I'm going to tell you something in a minute with bull flags. Because a lot of you trade them, including myself. Think about this. You're in, this right here might give you guys a BGO, what I'm about to say. It actually might give my own damn self a BGO. That's why I like talking about this stuff. Number one is I want to help you guys, but two, I'm trying to get better myself. In the contraction phase, bam. Okay, we know. Hey, don't jump in. We're away from value. There's a high probability it's going to come back to value. Oh, breaks down. We're not jumping in. Everybody else is getting stopped out because they don't know what the hell's going on, but you do. Breaks back. Okay, so if your bias was down and you had a divergence, you could take that trade. But now you're watching what happens here, right? So it comes back down. Uh-oh, now it holds. I personally believe this is life-changing stuff. Forex, crypto, and in my personal liquid stocks, futures, right? Again, different approach. But I'm going to now translate this into Charles's approach. Check this out. This bad boy holds after 1, 2, 3, 4. So if it bounces and doesn't shatter through it, that is a clue that the buyers, although the institutions that want this trend to go up, they just won. It just won. So now when it bounces off and does what? The first bull flag entering into the trending phase. The first bull flag entering the trending phase. Because again, what they're trying to say is, hey, you just trade when it's in the trending phase. And the best way that I know to do that is to, when I recognize if it's trending, the first flag, you can light this up. And guess what? What if it breaks down? No problem. You're not in the trade yet because it's still unclear. And then it hooks up and now holds this. What is that? Okay, you can wait for it to break down to show you, and then you trade the first bear flag. Because if it enters the trending phase, you are going to light it up. And I didn't even think about this. What I'm talking about now is actually kind of like my own self going, holy crap. Holy crap. So, let's go back to the ES for a minute, my friends. Happening right now. This is perfect. Okay, it's flat, so I'm trading zone to zone, but let's just say, let's do this. Wow, this is great. Hopefully you guys are finding value in this because I'm actually cementing my own concepts in my own brain right as we speak. Now, this might go back into here and we'll just keep drawing the box. But if it breaks down, knowing this logic, we're not going to trace it. Me personally, I would like to see it come back up through, right? Hit it up here, but watch this area. This area is everything. And then if it bounces off of that area, this could cause this to go up then you trade that first flag. Because again, when it comes out of this phase, it's going to go to the expansion phase. And again, we're still going to be drawing a box. Okay? Could go like this. Could go like this. Test it. Break. Then you trade the first flag outside of this. Because in the expansion phase, we don't know what's going to happen. But again, I prefer it to do this, this, this. But I'm going to watch this. This is great. That's all I got, guys. That's all I got. Let me know what you think. I appreciate your thoughts in the chat. All I'm trying to do is give you guys stuff to think about. And when I'm giving you stuff to think about, these are stuff that I'm learning from some of the best institutional people in the world. Don't believe it? It's still true. It's still true. But what I like to do is I like to take methodologies of people. Look, it's going back up, so it's still chopping, right? I like to take the methodologies of what other people are doing and see how I can build my own type of approach with it. Really got you to look at things a little bit differently. Wow, everybody. Hopefully you enjoyed that. Oh, man, I'm super pumped. The market phases, the value line, supply and demand, wonderful, wonderful stuff, okay? Now, if you'd like some more information on my live coaching classes, then check out my Options Elite Master Course, because anybody who gets that course has an opportunity to get the coaching that goes with it. Okay, you can always email me, and I'll be glad to explain and go over some more details about it. Check out my bonus. My bonus, I'm giving away the Forecast Pro indicator for free. The indicator that I used in this class, I'm giving it away for free for anybody who gets my Options Elite Master class or course this month. Now, if you're also interested in the Squeeze Pro, the Radium Fire Pro by Simpler Trading, check down below in the description. I have links to get those, and you guys know if you use my link to get the Radium Fire Pro or Squeeze Pro, I'm going to hook you up with over $2,000 worth of custom codes and bonuses that I've got for you, okay? So you're going to pay the same amount of money if you go get those indicators, so you might as well get them through me, and I'm going to give you the bonuses on top of it. All right, everybody, hey, stick around for next time, all right? If you, again, subscribe to the channel if you haven't done so yet. Hit that little bell to be notified when I shoot a brand new video, and hey, make a nice comment. Give me a thumbs up if you really like the video. All right, till next time, everybody. Trader Jeff Moore, author of the book Trading Part-Time, CEO, lead instructor of the Options Elite University, the Options Elite Live Coaching. We'll see you in the next video lesson.